I've heard you say that you think the process worked with WeWork, it sort of shook out the true valuation at the end.
Well, the capital markets process worked. So again, this gets to, the media can say things, the founder can say something, but at the end of the day, where the rubber meets the road is what are investors willing to pay for a company when they have the transparency of the real financial information that's been vetted and presented in an appropriate way. And when you have that, the market will speak. And so, using WeWork as an example, there was a lot of hype around that, but ultimately, when investors were able to have a discussion with real financial information and provide feedback, and work with an underwriting group to work with a company, there was a pretty clear view as to where the company could go public.
Can I ask you about, this group of companies, the unicorns that have had IPO problems or have not performed well post-IPO, like Uber. Are you concerned that we're seeing reflections of the .com era where it was all about churning higher revenues and nobody really focused on making any money?
Well, I wouldn't compare it. These are real companies. We can debate the valuations, but they're certainly real companies, and I think that's very, very different than that narrow slice of time, during the .com bubble, where I think there were a lot of companies that were really in a different state that were getting to public markets. But I do think what's happening is the monetary policy that's been rampant around the world has basically forced people out on the risk curve, has forced people to look for other ways to drive returns. And one of the things they've been chasing is growth, and to some degree, growth at all cost. So I think there's been a sentiment that if you can hook your wagon to a company that's got a lot of growth and is focused on growth, that something good, will come to that. That has incented lots of companies to take the capital they're raising from investors and spend it very aggressively to drive top-line growth without really understanding the consequence of how that can translate to profitability. And I think the market here is kind of speaking and telling people, you know what, let's rein that in a little bit. It's important for people to grow, but there's got to be a clear and articulated path to profitability, to earnings in some way, shape, or form. I'm a big believer that over time, a company can only be worth, over time, the discounted future value of its earnings. And so it's important that you have a business model ultimately that can generate profitability, and I think there's a little bit more market discipline coming into play, and I think that's healthy for markets.